Hello BeeBusinessBee fans, and welcome to a special BeeBusinessBee vlog, where today I'm here to talk to you about one of the topics I asked lots about, and that is the topic of tax. Yes, I get asked a lot about tax because people realise that when they get out to the world of work, they don't actually get to take home the amount of money they necessarily earn. So just because they earn £16,000 a year, for example, doesn't mean they get to keep £16,000. What they take home might be considerably less. So I thought what I'd do is I'd make a nice video that looks at the topic of income tax, national insurance and pension contributions, all deductions that come out of your wage when you go out to the world of work. And this video is going to talk you through the two different taxes, income tax and national insurance. It'll also explain a pension, and not only that, it'll show you a worked example about how much money you'd actually get if you were to have a certain amount of money that you'd earn at the end of every year. So make sure you follow this video, stay tuned and learn more about tax. So, you might be thinking firstly, why have I come out to what looks like a castle on a hill? Well, that's because tax can be seen as being a big mountain. However, my job today is to try and explain tax to you in a very simple way. We're going to start with income tax. Income tax is a tax that you pay on income. Quite simply, the government taxes you based on how much you earn. Now, the government gives you a personal allowance. Now, a personal allowance is how much money you can earn before you pay any tax. And in the moment in the UK, that is £12,500. So every single one of us can earn £12,500 and we don't pay a single penny in income tax. That has been increasing over the last few years. And the government's made a big deal about the fact that people have been better off because they don't pay as much back in tax because they have a bigger personal allowance. Then we have the basic rate of tax, so up to 50,000, so that would get between 12,500 and 50,000, so a maximum of £37,500, you'll be taxed at 20%. That's the basic rate of income tax, so you will lose 20% of them earnings in income tax. If you're lucky enough to earn over £50,000, so anything over 50,000 up to 150,000, that gap there is taxed at the higher rate of 40% tax. So you'll then pay 40% tax on the bit that you're earning over that basic rate of tax. And if you are really lucky and you're earning over £150,000, then anything over £150,000 is taxed at 45%, and that's classed as a higher rate of tax. Now, the reason that the government does that is because the idea that if you earn more, you're able to pay more back. Of course, there's a fine line here because the rich are normally the most socially mobile, so if you tax them too much, then they may choose to leave the UK and pay no tax at all. And of course, is it better to have 45% tax, for example, rather than having a big fat zero? That's one of the big debates that we have in society at the moment when it comes to income tax. And it's not always as simple as just taxing the rich more, because they're the ones that can leave the UK quite easy, and they're the ones that probably can find the ways to not pay as much as they want if you don't give them the incentive to pay in the first place. So, that's income tax explained. There is another tax you have to pay, and that's something called national insurance. Now, national insurance is a bit of an interesting one. The original purpose of national insurance was to pay for your pension. So the way that it was sold to people was that you made this payment and it was kept away by the government in a nice bank account, and when you came to retire, that was going to pay for your pension. However, many people now argue that it actually goes into the same government pot and it's spent and it isn't really kept for your pension, and if anything, it's being used to pay for pensions at the moment of people who retired. That is a whole different debate. However, you will be paying national insurance as part of your deductions on your wage. Now, national insurance can be quite complex. However, to keep this simple, what we're going to do is we're going to use the basic rate. The basic rate is 12%. So you're going to assume you're going to lose 12% of your earnings on basically paying national insurance contributions. The way it's actually worked is you actually earn £166 per week national insurance free, and then anything over that up to about £960 is where you pay that tax of 12%. Then there is a higher rate which is actually at 2% on any earnings over that £900 threshold. However, that is making it really complex, and we're just here to look at what you're going to pay and what deductions you've got. And national insurance, as far as we're concerned, is going to be that very simple rate of 12%. Now, there is one final deduction that you have to pay, and that is your pension. Now, everybody is now opted in by default to a pension. You can opt out, however, it's not advisable. Now, the idea of a workplace pension is that you're going to pay in there and you're going to get your employer to pay in as well. However, as a minimum, you will have to pay in 5% contributions on your earnings. So 5% of your wages will go into your pension contribution. Your employer will pay in 3%, and that will make a total of 8% going in every year. When you get to retirement age, you retire, and there is your state pension that's being paid for. And obviously that's going to be in addition to what you're going to be able to claim from the government, assuming there's going to still be a state pension around. However, that is a deduction that you probably will be paying, and it's advisable that you do pay. So as you can see, there is quite a lot of deductions that you're suddenly going to take out of your wage when you go to the world of work. So when you see the salary says, for example, £16,000, how much do you actually get to take home from that £16,000? It's certainly not going to be £16,000. Just like when you see a salary of £55,000, how much do you actually get to take home when you see a salary of £55,000? So all considerations you need to understand, because taxation affects every single one of us. Of course, there are more debates around this, such as should we tax people more or should we tax people less? How do people feel about taxation? Well, when you see taxation and you see how it impacts on your wage, you're probably going to start to question whether taxation really should be increased. But at the same time, you need to think about what does the government do with your taxation and where does it spend it. The one thing that is definitely clear is taxation is not a mountain. So yes, I've come up to the equivalent of a mountain today and I'm on top of it. Taxation is something you just got to get your head around, try and understand, try and have an understanding that it does affect you, it affects every single one of us, and hopefully this BeeBusinessBee video has been really, really useful for you. Remember what you need to do now. You need to make sure you click the subscribe button down below, you need to make sure you give me a follow on all my socials, and of course make sure you keep buzzing.